Welcome to the Unconventional Investor Podcast. I'm your host, Michelle Moses, certified financial planner, licensed realtor, and founder of Me Financial. If you're an accredited investor feeling overwhelmed by managing your portfolio and looking for alternative investment strategies that go beyond the traditional stock market, you're in the right place. Let's head into today's episode so you can start taking control of your financial future. Hello, everyone, and thank you so much for tuning in. I am excited about this one. This one is something that I have been watching. We're going to have Iroquois Valley Farmland today, and we're going to have the CEO, Chris Zuehlsdorff, talking with us. I'm excited to have this one on because a lot of the stuff that I talk about when it comes to alternative investments is not so green and sustainable. And I have been watching Iroquois Valley for, I want to say 7 or 8 years and watching what they're doing and looking at their updates. And so they're finally on the podcast. So yay. So I have Chris Zuehlsdorff, who is the CEO of Iroquois Valley Farmland REIT here. And he is a farmland, I'm sorry, I'm tripping over myself. He's a farmland investment company focused on organic regenerative agriculture, and the company provides long-term leases and financing to organic farmers and works to build a more resilient food system by preserving farmland for organic production. So, Chris, thank you for being on.
Thank you for having me. It's great to be here, Michelle.
Yeah, I don't think that people really know that this type of investment exists. I get a lot of calls and people say, I want to buy some farmland. You know, we got to get into this. This is, it's something that people want. People obviously want to buy organic. I mean, just look at Costco, right? I mean, the organic sells out and that's what people want. They want to be healthier. So I think it's wonderful that you guys, what you're doing. And so can we just start out with like how long Iroquois has been around and kind of how it got started? And then I really want to get into your story because your story is also very interesting.
Yeah, happy to do that. So Iroquois Valley was founded in 2007 by Dr. Stephen Rivard and David Miller. They were actually college roommates at Loyola Chicago and grew up in the same small town near Kankakee, Illinois. Dr. Rivard was an emergency medicine doctor for nearly 30 years, and Dave Miller spent most of his career in kind of commercial real estate. And they were, I think, having a cup of coffee at the local IHOP in Chicago and began discussing really the declining patient population that Dr. Rivard would see in his practice and coming through the ER. So whether it's the increased prevalence of diabetes and heart disease and cancer, and they traced it back to really kind of chemicals in our food system. And the solution that they came up with was to go out and buy a farm and transition it to organic. So they bought one farm, I think, in 2007, a second farm in 2009, and then by 2012, they had a small little kind of friends and family investment fund that kind of got things started. And in 2016, as the company started growing, Dr. Rivard and Dave Miller converted the company into a real estate investment trust and a public benefit company, which is a structure that we have in place. They are now in the day-to-day activity at Iroquois Valley, and I was fortunate enough to join the company in 2022 and became CEO in February 2023.
Okay. And then that kind of segues into your history. So let's start in yours because you grew up on a dairy farm, right?
That's right. Yeah. Small family dairy farm in Fergus Falls, Minnesota. So kind of west central part of the state, about 500 acres, and maybe had a herd of cattle of about 80 head or so that we milked on the small family farm.
And then you went into finance, right? And you spent many years in New York in finance. Is that correct?
That's correct. Yeah. So I grew up, kind of on the farm in the 1980s and 1990s. And, that was kind of the last kind of, let's call it, really severe recession and almost depression in the farm economy. And candidly, in high school, wanted to probably get as far away from the family farm as I could. And so I went to St. Olaf College down in Northfield, Minnesota to study math and economics. And then after kind of a short career in the Minneapolis area, slowly migrated to the East Coast, went to graduate school in Pittsburgh. And then, yeah, like you said, I spent about 20 years working in New York City, kind of in the more traditional kind of alternative investment space. So the company I was with advised kind of high net worth individuals, endowments, foundations, and other institutional investors on alternative investment and kind of hedge fund allocations. So we kind of identified and built portfolios for those types of clients, and I did that for nearly 20 years until kind of looking to get back into agriculture and do something in the next kind of chapter of my career.
So you were kind of looking out you wanted to do something in agriculture after doing all the finance stuff for 20 years.
Yeah, the catalyst was probably twofold. I had gotten involved in a nonprofit in the Hudson Valley of New York, Glenwood Center for Regional Food and Farming, and so they had a working farm, a very kind of large, successful apprenticeship program where they're kind of training the next generation of farmers around sustainable farming practices. And there was a whole kind of suite of programming around convening kind of thought leaders and change makers up and down the Hudson Valley from Albany down to New York City. And so that kind of got me kind of re-engaged and interested in this space. And what I kept coming back to was, how do we mobilize capital? How do we get the same type of investors that I'm working with in my day job, so to speak, more interested and passionate about sustainable and regenerative agriculture? And so, yeah, I left in the summer of 2021 from my finance career and really focused on how to have that kind of next chapter in food and agriculture.
Yeah, I can't agree with you more. I mean, I there's so much money out there of private equity and these funds that if it could be put towards some of these things that people really do want, like organic farming and regenerative farming, it's like it could change the world, honestly. So I think what you guys are doing is so amazing. And so can we kind of go into how you guys grow, I guess, and how, how the fund kind of works, so that are you attracting farmers? Are they coming to you? Like those sorts of things.
Yeah, no, great question. Happy to discuss that. So I mentioned that we're a private real estate investment trust and a public benefit corporation. So we're focused on delivering both, financial returns and impact to our investors. We use that capital to support farmers transitioning farmland to certified organic production, and we do that in partnership with our farmers. I think our business model is pretty simple. We raise capital from those impact-driven investors, and we use that capital to provide long-term leases, mortgage financing, and post-investment support to farmers. They are the ones bringing us the transactions and the deal flow. Typically, we're not managing the farms ourselves as Iroquois Valley in a top-down way. Rather, we're relying on our farmers, who are the best stewards of the land, kind of locally on the ground, to go through that organic transition, which is a three-year process. And so farmers value our 6-year kind of long-term lease model that we have in place.
So they come to you with a farm already, or are some of them looking to get into farming?
Almost all of them are successful kind of organic farmers in their own right, and they're looking to grow their business and grow their acreage. So we're kind of almost like growth capital, or kind of growth equity in a way for farmers that maybe have transitioned 200, 300 acres of farmland to certified organic production, and another 80, 120 acres, in some cases 240 acres may come available, and we'll help them get tenure and secure that farmland via long-term lease, so they can be in growing their business and their overall portfolio.
And so does the fund buy the land that they're wanting to expand, and then you're leasing it back to them, or are you giving them loans, or it's a combination?
That's right. We buy the farmland and then lease it back to the farmer. That's about 80% of our portfolio. The other 20% of the portfolio is mortgage financing. That got started really to support farmers in some of the anti-corporate farming states, kind of I would say the west of the Mississippi River. So states like Iowa, Minnesota, the Dakotas, Nebraska, where corporations are limited in owning farmland. The bulk of our portfolio is in Illinois and Indiana. So 80% of our portfolio is owned farmland, kind of under that purchase lease model that I just described, and then another 20% is mortgage financing. So today our portfolio is about $125 million. We manage about 37,000 acres in partnership with 70 farmers in 20 states.
Wow! And is that all in one fund?
It is all in the one fund. Yep, it's all in the REIT.
Yeah, that is really, really interesting. And so most of the time they're coming to you saying, okay, I already am an organic farmer. I already know. So they know the basics of organic farming. And so is that kind of what you guys are looking for, is that they already have some knowledge of farming? Because you're not into that like education piece of it.
That's right. Yeah, farming is hard, and in its own right. And organic farming is even harder. So like ideal farmer, our ideal customer has gone through that transition, hopefully at least once. They've got kind of a history, an operating history that we can look at, and a kind of financial history that we can look at and underwrite. Ideally, they've got their own network in place. They have their own markets kind of already established, and we can begin to help them kind of grow and build their business. We also have our own network of farmers, technical assistance providers, and other kind of financial partners that we can kind of help connect them with and further their business as well. It's kind of when I mentioned some of the post-investment support that we can provide, but ideally farmers are bringing some of that network to the table and mentorship to the table already.
Yeah, well, and I wouldn't think that you would be the education piece of it, but just from the emails and things that I get from you, there is so much education about what regenerative and organic farming, and highlighting some of these farmers, that I guess I kind of assumed that you guys were educating some of these people, because you do such a good job of, just with your communications and, to investors and to the public.
Yeah, and there are a lot of great organizations out there that are, really kind of leading on that front around education and technical assistance. And earlier this year, we announced the strategic partnership with Rodale Institute to really kind of deepen our support of farmers going through the transition. So, there's a few different organizations that we like to work with and put farmers in touch with when it makes sense to do so.
And so what do you mean about transitioning? So if they already have an organic farm and they're looking to purchase like more land, so do they need the funding from you guys? Because you said it takes 3 years. What does that look like? Is it that that land can't be farmed, and so that's why they need the money from you guys, or what's the story there?
Yeah, good question. We're typically buying conventional farmland, and then the farmer is undertaking that transition to certified organic production. And the point of going from kind of that day one to being certified organic and selling your crop under the USDA organic certification is a 3-year process. And so, our long-term leases give farmers at least the 6-year period to kind of undertake that transition, and then in year 3 begin selling their production at a organic premium, and then on into the future. So you take a pretty big hit in years 1 and 2 when you're going through the transition. You're facing very dramatically lower production, lower yields, and you're selling into conventional markets. And so farmers either need to have a big pool of acreage to kind of spread that decline in revenue across. They need to have access to, capital, whether that's operating lines of credit, or cash on their balance sheet, in order to kind of weather that initial kind of 2 to 3 year transition period. And so the typical agricultural finance model is not set up for organic transition. So our leases are attractive to farmers to help them get through that transition.
So basically, in those 3 years, they have like a lower payment. Is that kind of what it is?
Yeah, we have there's a base rent that we establish with farmers, and then after certification, we have a variable rent component in our leases as well. So we share in some of that kind of upside with farmers after they get through the transition.
Okay, well, that's wonderful. Yeah, because I would think it would be difficult to. I was thinking that they couldn't farm on the land at all if they were trying to turn it to organic. But really what they're doing is organic farming, but they can't call it organic because it hasn't been the 3 years.
That's correct. Yep. Yeah. It's considered transitional ground, and you're selling it into conventional kind of commodity markets, lower, which is lower prices to begin with. And then you also have lower yields and lower production because you're not putting any chemicals on there.
Right.
There are very few markets that exist for transitional cropland. I mean, that's one area of opportunity, for transitional production, but really that's a very small component of it. Most of it is going into the kind of conventional commodity markets.
Okay. And I'm also very surprised by your emails of that the people that are, I feel like from what I see is that a lot of the farmers are young. Are there a lot of young people wanting to get into, are there newly established farming or, and they're wanting to expand? Is that a good, or is that a correct perception that I have from reading everything?
Yeah. Our portfolio very much skews younger, kind of millennial and below. I think the average age of the American farmer is almost 60 years old. The American Farmland Trust has an interesting stat, but they expect 40% of farmland to transition in the next 20 years. And, the next generation of farmers and farm families are at least, I would say, like organic curious and interested in, regenerative organic practices and how they can have a career farming that is free of chemicals and healthy for their kids and their families on the family farm. And so, our portfolio skews much younger because of that.
Yeah, that was a really interesting stat to me. And then since you said you have most of your farms in Illinois and Indiana, do they partner? Because you'll see sometimes I went to I think I was on a wine tasting and they had the ducks, going from, and the goats, but they changed them from different they would share them all in the different wineries. So do they share any resources, I guess, if they're really close together, or do you bring them together in any way, or is it strictly we're just financing and leasing and that's about it?
Yeah, that's a great question, and it's something that we're exploring a little bit more deeply in what we call kind of building hubs, or kind of very regional groupings of farmers, so we can have some more knowledge sharing and more connection. There is one of the original farmers that we work with, Harold Wilkins and his son Ross Wilkins, farmed several thousand acres organically in Illinois, and they've actually established a mill for some of their production. And I do believe other organic farmers in the area that we also partner with probably have contracts and supply into that mill. But there are some opportunities like that we're looking to explore more deeply.
Yeah, I think it's really cool when people do that. Like what they had the little ducks, and they would go from one property to the next and all that. I don't know a whole lot about it. Obviously, I'm very novice in this, but I know more than the average person, I guess. So maybe. And so when you're talking about these people that your first investor, that kind of brings up, do these people, how long are these, leases and mortgages and all that? Are they in the fund forever, or is there a chance for them to pay this off? What's their exit strategy?
Yeah, the leases, like I said, are 6 year in duration, the first part, and then they kind of evergreen renewals every 2 years thereafter. And then it's after year 6 that farmers have the ability to repurchase or purchase the farmland from Iroquois Valley, should they want to. Typically, it's a farmer is kind of making that operating expense or kind of capital expense decision for their business, and typically the farmland is very profitable because they've gone through a 6 years of 3 years of transition and another 3 years of certified production. They have a very profitable farm, and they're happy with our lease payments and our lease structure, and they want to keep that operating expense and maybe grow land elsewhere. And so one of the stats I find really interesting is that the repeat investment rate with farmers in our portfolio is extremely high. I think something like 60% of our portfolio as 2 or more farms with the same farmer. And so, that's them making almost the operating expense decision rather than a capital expense decision. And then with the mortgage financing, it's a 10-year mortgage term. We have 5-year interest only to help again get through that kind of transition period, and then a kind of a 5-year principal plus amortization before kind of that balloon payment at the end of year 10. So the typical outcome there is farmers will get through their transition and look to refinance with a traditional lender.
Okay, and are the traditional lending rates usually higher than what you guys are charging from the REIT?
It depends a lot on the interest rate environment.
Yeah, I'm sure.
To be honest,
yeah, but in the past, has it been?
When rates are higher, we tend to be a little bit more competitive than when rates are low, just because of the nature of our cost of capital.
Okay. Okay. So now let's switch. So now we know what your fund does. Okay. So everybody is putting money into this large REIT, everyone. So a REIT is a real estate investment trust. And essentially I describe it as like a mutual fund where everybody pools their money and you are trusting Iroquois, who is the manager, to then manage that money. And they're basically deploying it, and then they pay you whatever the rate of return is. And so what can you give us the basics of what your fund pays out and maybe the minimums and things like that?
Yep. Yeah. So do you mean like the investment minimums and kind of the terms of the fund as well?
Mm-hmm.
Yep. Yeah. Happy to do that. So we are, I think, unique in the marketplace in that we're also registered with the SEC under a Reg A exemption. So we can take non-accredited investors as low as $10,000. So we have 950 investors in our fund, in our REIT today. So as low as kind of $10,000 all the way up to a large family office that has close to $10 million invested with us and everything in between. So we have a very diverse investor base. And we are also, given the real estate investment trust structure, required to pay out about 90% of taxable net income or greater every single year. So, investors get the benefit of a small dividend stream from our investment, and then the kind of the long-term capital appreciation of organic farmland that makes up the kind of the return to investors, which since inception has been just over 9% per annum.
And is that 9% the dividend that they're receiving, or that's combined, the appreciation with the dividend?
That's 9% total return, and it's driven largely by the kind of capital appreciation of the farmland, and the dividend income or current income is a much smaller component of that. It's ranged between 0.5% to sometimes as much as 1%. As we grow, we expect our hopefully our dividend yield to increase over time as we get more scale.
Yeah, that's the way that I've pitched it. I've had a couple of investors invest with you, and that is the way it's been more of, this is a long-term play of that you're going to want appreciation over time of land. And if you want to buy some farmland, this is kind of the way to do it. That's kind of the way that I've told them about it. You're not looking for regular income. You're looking to, one, help out with organic farming, and you want the appreciation from the land because they're not making it anymore, And so I really think it's great. I want to kind of circle back to this Reg A registration that you guys have. You guys, I think it's really great that you did that. It is so expensive to do it. And the paperwork I hear is about twice as much. And so I really want to applaud you guys for doing that, because it just shows the kind of company that you are. Because I think a lot of companies, they shy away from it just because of the time and energy and resources that it takes.
No, thank you. It is a significant undertaking, and we're, very excited to have as broad and diverse of an investor base as we can. And the real estate investment trust really kind of affords us that semi-permanent capital base, but also with the Reg A exemption and being able to take non-accredited investors. I'm extremely proud that we've been able to really democratize access to a diversified portfolio of organic farmland.
Yeah, I completely agree. And there's so many of these investments and people that are not accredited investors that come to me wanting to get into some sort of alternative investment. They don't want all their money in the stock market and in bonds and, their normal things. And there's so many things that are shut off to them, even though they want to diversify and invest in something that they're more excited about. So hats off to you for doing that. I think it's, you guys are a certified B Corp. I mean, you're doing all the right things. So you guys really have some values and morals and principles that you seem to follow all the time. And so I just think it's really great that you do that.
Right. Thank you, Michelle.
Yeah. And so is there any exit strategy that investors need to think about with your REIT? So if they invest money, do they have to hold it for a certain period of time in your fund, or is there anything like that? What is their exit strategy, I guess?
Yep. So when buying equity shares in our REIT, there's a 5-year commitment, or a 5-year lockup. And then after the end of 5 years, we offer quarterly liquidity to investors, subject to kind of a 6% kind of annual gate. So kind of 1.5% per quarter can be redeemed. One of the things that's very important to us in trying to be values aligned is we never want to be forced to have to sell a farm kind of out from under a farmer that's invested kind of all that kind of sweat equity into the transition. And so this gives us kind of that semi-permanent capital base that I mentioned, but yet the ability to provide liquidity to investors over time.
Yeah, you would never want to sell. I mean, just because of redemptions, to sell a farm if they've been working it and doing all that, that sounds terrible. So yeah. Well, you guys, it's really easy to invest with Iroquois. Their website is set up. I mean, you just go to invest and they have the paperwork. It is super easy. Again, and Chris, you guys have done a great job with your marketing. Your newsletters are wonderful. And you guys, if you've listened to a lot of my episodes, then you know how important client communication is to me. Having skin in the game, having the right principles, all of these things. And I can attest that the client communications are very, very good. That your marketing is great. You send out lots of like meetings and, all of that. You definitely know what's going on with the fund. And so I think that's wonderful that you guys do that. So yeah, thumbs up to you.
No, thank you. And shout out to Donna Holmes and Nicole Ferrer and our investor relations and business development team. Yeah, they've done a lot of great work getting our investor communications where they are today.
Yeah, no, they do a great job. So is there anything that I'm missing that's like, a key part of why some people might invest with you, or different ways that people use your fund in a creative way? Am I missing anything, or do you feel like we've kind of covered the basics of people wanting to, if they wanted to find out more, then they could contact us or go to your website?
Yeah, I guess the one thing I would add is in thinking through how I've seen kind of investors use us in the past is, farmland's very much a real asset, and, can provide kind of strong portfolio diversification, and, it can act as an inflation hedge. It can provide current income. And so it's, I think it's a nice diversifier in kind of a traditional 60-40 portfolio. The other benefit, or I guess maybe convenience that people like with our REIT structure, is that we issue 1099s and not K1s. So some clients appreciate that.
Absolutely.
That aspect of it as well.
Yeah, you're waiting on the K1s because you guys, if you haven't invested in any of these, most of them give what's called K1s, which is like you need those to do your taxes, and they don't come out until like the week before your taxes are due. So a lot of times you have to file an extension. So that's what he means by that. It just makes it a lot easier to file your taxes. So totally agree with you. Well, Chris, thank you so much for being on. I really think that I thank you for what you're doing for organic farming. And I think a lot of people want to live healthier and, with less chemicals. So thanks for your time of explaining Iroquois. And you guys will have all of Iroquois' information in the show notes. Can you tell them what the website is just before we go?
Yep, it's IroquoisValley.com.
Okay.
We have a lot of great information about our farmers and our team and our kind of overall investment approach.
Yes, there's a lot of information, and you can just invest like right there. There's paperwork and all of that. So, and as he said, you don't have to be an accredited investor, so you don't even need somebody like me to invest in it. You can just go straight to the source. So Chris, again, thank you so much for being on. You guys, thank you so much for listening. I appreciate you tuning in and learning about all of these investments. I hope that you found something interesting here, and I hope you have a wonderful day. Thank you so much. Thank you for listening to the Unconventional Investor Podcast. I hope you feel more confident in how you can grow your wealth using the strategies I shared in this episode. If you're ready to take the next step in diversifying your portfolio outside the stock market with alternative investments, head to mefinancial.net/contact us to book a 15-minute consult call with me. Let's discuss how we can work together to achieve your financial goals. Until then, I'll see you on the next episode.